Uber, Airbnb, and Facebook made billionaires. But for every breakout success, thousands of founders burned out chasing the same dream. Some raised millions and still couldn't pay themselves. Others skipped the venture out early and they started small, stayed scrappy, and built real wealth on their own terms. That's the wild thing about entrepreneurship. It's not one straight path, it's a maze. And your business model is the map because it drives the outcome. Not just your product or your idea, but the structure that you build inside. You might be in that in-between stage, wondering what kind of business to build or whether to start a startup or freelance or hire a team or go solo, take capital or go cash flow first. That's where clarity on the model changes everything. And in this video, I'm going to break down a few of the top business models trending right now, the real trade-offs, and how to pick the one that fits your skills, your bank balance, and your risk profile. If you don't know me, I'm Logan Burchett. I'm the co-founder and chief operating officer at Forecastr. We built Forecastr to fix the nightmare of financial modeling in Excel. As a fractional CFO, I've helped thousands of founders raise capital, structure rounds, and scale with disciplined financial modeling and scenario planning. And after watching so many companies rise or stall, one thing became crystal clear. The business model they chose often decided the outcome. And nowhere is that more obvious than within the first business model that we're going to talk about, the venture-backed startup. It's the high-stakes, high-speed path where 1% win big and almost all don't make it. You probably think you know how this works. You dream up a genius idea, you pitch a few VCs, they wire you millions of dollars, and then you're rich. You've seen the headlines about massive raises, billion-dollar valuations, fancy offices, flashy exits. What you don't see is the other side. The pressure, the dilution, the sleepless nights, and the 3 a.m. are we going to make payroll panic? Take Stripe, for example. They started with one simple idea: make payments easier. And they stayed focused, they executed hard, and they built a multi-billion-dollar empire. Then look at Quibi. They raised $1.75 billion, had Hollywood royalty running the show, and still shut down in 6 months. They had similar models, and they had totally different outcomes. Now, it's easy to see why founders chase this model. You're building with other people's money and not your own. That capital gives you speed and resources and a shot in markets that bootstrap founders can never reach. You get access to elite networks, investors, mentors, top-tier hires, distribution deals, doors that rarely open without funding. You can move fast, you can hire your dream team, and aim for massive scale from day one. And if it works, you don't just win, you change your entire life. You could go public, you could get acquired, you can dominate an entire category. That's the dream that fuels these venture-backed companies. There's an unlimited upside. But what makes it powerful is also what makes it really dangerous. You're accelerating everything, growth, risk, and burn rate all at once. But when the pace gets that high, every mistake compounds fast. Now here's the part that never makes the headlines. More than 90% of these companies fail, and not softly. They collapse fast. The product stalls, the team leaves, the money runs out. The founder is left staring at their burn rate, wondering what went wrong. Your salaries can sometimes end up lower than your employees. Your ownership shrinks every round as you trade equity for runway until you realize you don't really own it anymore. Growth isn't optional here, it's demanded. VCs expect it. They're betting on 100x returns, and if you're not on that trajectory, they move on to the next founder who might be. If you can map a clear path to $100 million in revenue, push 10 to 20% growth every month, and handle the pressure of constant fundraising, this might be your game. You thrive on momentum. You're comfortable in chaos. You see capital as leverage instead of security. But if instead you crave early profit, control, or peace of mind, this model will eat you alive, because freedom comes later, if it comes at all. So here's your quick test. Map your bottom-up path to $100 million in annual revenue. Name 3 partners who would buy early. List your first 3 hires, people who can help you execute faster than your competition. If you can do that, you're ready to start. And your first moves are to write a 1-page memo breaking down your problem, your market, your wedge, your moat, and your growth plan. Run 30 deep customer interviews. Secure 15 letters of intent before you even touch code. Then ship a bare bones MVP tied to 1 activation metric. What if you don't want to play that game though? What if you'd rather build something that you own completely, profitable, controlled, and sustainable from day one? Then it's time to talk about the second model, the bootstrapped business. This one comes with no investors, no board meetings, no waiting for permission to move. You run the show. You build your product, a software, a tool, or maybe even a scrappy piece of hardware, and you pay your own way. No outside cash, no carved up cap table, no chasing VC meetings hoping for a yes. You serve your customers and let revenue fund the next steps. But this path runs on discipline. Every dollar has to multiply. Every mistake costs real cash because this path is cash first. There's no hobby energy here. Every dollar comes from your pocket, a small line of credit, or more than often from customers who keep paying you. In short, your business feeds itself. You don't sell the dream, you deliver it. Bootstrapping gives you something venture rarely does: complete control. You decide what to build, how fast to grow, and when to take profit. No investors pushing for impossible targets or growth at all costs. You move at your own pace, and you keep every piece of whatever you build. In this case, profit shows up sooner because you charge from day one. If customers pay, you're solving the right problem. They don't, you know immediately. You adapt fast because every decision hits your wallet, and when it works, it's yours. But this model comes with weight, real weight. When you bootstrap, you move one step at a time. There's no massive marketing budgets, no huge team to lean on. You grow through momentum. One customer, one improvement, one small win at a time. You'll wear every hat until it hurts. Sales, support, product, marketing, accounting. There's no someone else will handle that. It's you. And if you don't learn to systematize, it's a guarantee that you will get burnt out. Cash is going to stay tight in this model. One careless purchase or vanity expense can cut your runway in half. And sometimes the biggest trap isn't too little money, it's too much too soon. A sudden big check makes you feel like you can spend your way to scale. Next thing you know, you're building for optics, not outcomes. This model fits founders who want freedom early. You care about profit, not vanity metrics. You like moving at your own pace, staying close to customers, and keeping full control of everything that you build. If you can sell 10 customers in 30 to 60 days and you're willing to keep your spending lean, bootstrapping can scale beautifully. But if you hate sales or crave blitz scale growth, it's going to test your patience fast. My quick test for you is this. Could you hit $5,000 in monthly recurring revenue within 90 days? If that sounds doable, you might be wired for this path. For your first moves, you want to pick one narrow customer segment and pick one painful problem. Pre-sell 5 customers before you build anything. Set your day one price and raise it every 3 wins. But what if you're not there yet? What if you don't have a product? Just a skill people already pay for. If you want to earn quickly, get proof fast, and fund the next step, then a service-based business is for you. No product to finish and no investors to impress. Only a skill people need and you charge for it. You solve a problem on Tuesday and money lands by Friday. You take something you already know how to do, design, editing, marketing, coding, coaching, bookkeeping, photography, anything, and sell outcomes, not hours. You listen, define the result, and deliver it well. Stick around to support clients post-delivery, and those relationships turn into referrals. That's how this model compounds, one solved problem at a time. Your portfolio is built by doing. This model moves fast. You can start earning immediately. You don't need a product or funding or a big audience, just one clear offer and the courage to deliver it. Startup costs are minimal. With a clean pitch, a calendar link, and way to get paid, you're in business. You can get instant feedback in this model. Clients tell you what works and what they'd pay more for next time. Each project is going to sharpen your process, and working directly with real people teaches you what markets actually value. It's flexible too. You can start part-time, you can niche down, and you can raise your rates as you build proof. Each client becomes a case study. Each project becomes leverage. And that's how service work quietly funds your next thing, a product, an agency, or even your first startup. But this model comes with its own weight. Now, in the beginning, your time is the business. If you're not serving clients, then you're not earning. Scaling means systematizing, and until you do, you're going to hit a client ceiling pretty fast. You're everything. The salesperson, the operator, the creative, the support team. If you don't protect your time and define your scope, burnout will find you. This model fits those who want to earn quickly, prove their value fast, and build real credibility before scaling. You already have a skill people are paying for. If you can communicate clearly, deliver consistently, and handle pressure, this model gives you freedom faster than almost any other. It's perfect for builders who need cash flow and not capital. For people who want to learn business from the inside by doing instead of guessing. But if you struggle with boundaries or you're chasing passive income too early, this one's going to test you. Now here's a quick test for you. Can you land 3 paying clients in the next 2 weeks? The answer is yes, you're ready to start. Your first moves are this. Write a one-sentence offer that defines the outcome, the timeline, and the price. Share one clear proof point, a client win, a past project, or a case study. Service work builds proof, cash flow, and confidence. The three things that every founder needs before building anything bigger. Now, if you're ready to scale beyond your own time to build something that earns even when you're not the one delivering the work, your next model is for you. Now, back in the 2010s, dropshipping was a gold rush. Low ad costs, untapped suppliers, and the rise of Shopify made it feel like anybody could launch an online store, print money overnight. You could run Facebook ads for $20 a day and easily land 3 to 5 sales. Scaling to $500 or even $1,000 a day was possible. Manufacturers didn't know how to sell online yet, so they relied on dropshippers to reach customers. It was a huge advantage for these early players. But the world's changed. Today, ad costs have exploded. Facebook CPMs are up more than 60% in just 2 years, averaging $10 to $15 per 1,000 impressions. Competition is relentless and it is everywhere. Millions of Shopify stores, millions of identical products. Customers are far more skeptical than they've ever been before. Amazon now owns half of all e-commerce sales, making it even harder for independent stores to compete on price or delivery speed. Meanwhile, the internet is full of screenshots that will tell a different story. Gurus photoshopping Spotify dashboard, 60-second success stories that promise $10,000 in 2 weeks. When the market got crowded, many of those people stopped selling products and started selling courses about selling products. That's the illusion that burned thousands of new founders. But people are still winning. Thousands of stores thrive today by evolving past the old playbook. The winners in e-commerce don't sell products anymore, they build brands. They create communities, they tell stories, and they turn transactions into trust. The playbook looks different now. You build a niche brand, use organic marketing like TikTok user-generated content to drive awareness, and you layer in affiliate programs for steady, low-cost growth. It's harder, yes, but also more sustainable. Even with tight margins and higher costs, this model still attracts builders for good reason. It's scalable. Once your store works, it works everywhere. You can sell 20 units or 20,000 without changing your structure. It's flexible. You can run it from anywhere with Wi-Fi. You can build while traveling, testing ideas quickly, and reaching customers globally. Really fast to validate. You can test products before touching inventory. In a single weekend, you can launch a store, you can run ads, and you can see real numbers. AI tools and automation have also changed the game. From store builders to fulfillment bots, product research, and customer support, much of what used to take a team can now be done solo. The real winners are going to focus on quality, retention, and long-term brand trust. They blend storytelling with automation. They use influencer seeding, user-generated content, and community-driven launches to reduce costs and grow organically. That's how they survive and win in 2025. For creative founders, e-commerce is a playground. You get to design, market, test, and tell your stories around physical products people actually hold. And when it clicks, the scale is unmatched. But this model isn't easy, and it's where most people stumble. Margins are thin, often 15 to 20%, and ad costs continue to rise. Competition is relentless, and customer expectations, fast shipping, great service, total trust, higher than they've ever been. Now, the biggest trap here is believing the hype, chasing viral products instead of building systems, building for screenshots instead of customers. This model fits founders who want to build and scale, people who love the blend of product and storytelling and systems. You're creative, analytical, and you're curious. You enjoy testing ideas, studying data, and turning insight into traction. It's ideal if you want a business that can run while you sleep, but it is not for anybody chasing money. If you think like a marketer, care like a builder, and move like an operator, this model will reward you. Here's a quick test. Could you launch one niche product with a clear story and a reason to exist beyond price? If yes, you've got the foundation to build something real. Here are your first moves. Pick a niche you genuinely understand. Create one offer that solves a tangible problem. Build your first audience through organic content before spending $1 on ads. Forget shortcuts. The future of e-commerce belongs to those who build trust, not hype. So let's talk about the next one. And this is a completely different kind of business. One built not on inventory or ads, but on attention. This is where your ideas and your voice and your influence become the product itself. And that's the next and last model, a content-based business. You don't sell software, hardware, or physical products. You sell insight, trust, and personality. Your leverage comes from your ability to share ideas that connect and build an audience around them. You post content, you grow attention, and you turn that attention into income through products and sponsorships and partnerships. Now, it sounds simple, but done right, it's one of the most powerful business models in the modern world. Because a content-based business is built around one thing: attention. You create value for an audience, and then you monetize that relationship in countless ways. Ad revenue, sponsorships, affiliate marketing, services, subscriptions, products, digital or physical. That aligns perfectly with your audience's passions. That's why creators who succeed don't just post content, they build brands. Logan Paul and KSI built Prime, which is an energy drink designed for their young audience. MrBeast launched Feastables, a chocolate brand that turned his storytelling into product trust. Huda Kattan built Huda Beauty, creating cosmetics that resonated with her global beauty community. Emma Chamberlain launched Chamberlain Coffee, a lifestyle brand that matched her relatable and laid-back voice. Each of them started with content and used attention to build empires. They didn't guess what their audience wanted, they listened to them. And that's the lesson. Your audience comes first, your product comes second. This shift changes everything. 59% of creators now identify as entrepreneurs, not influencers. They're building real companies. They're diversifying revenue streams and taking full control of their financial future. When you own attention, you own opportunity. You don't need gatekeepers. You don't need permission. You can launch faster, cheaper, and more authentically than ever. Selling products or services that resonate with your audience doesn't have to look like Prime or Feastables. It can be as simple as a digital course, a paid newsletter, or a niche service built around what you already know. The key is connection. Creating something that genuinely solves a problem or amplifies a passion for people who follow you. But this path has its own risks. If you rely solely on social media, payouts, or brand deals, you're one algorithm tweak away from losing visibility or income. A wrong trend, a policy change, or even a week of burnout can tank your momentum overnight. The creator market is super crowded. Everyone's launching products now, but without a clear niche or a strong story, most disappear in the noise. And chasing virality instead of loyalty leads to a very fragile business. Trends fade, communities actually last. So to win here, you need consistency. You need patience, a real understanding of your audience. For your connection, not clicks. This model is perfect if you love teaching, storytelling, or entertaining, and you're willing to show up consistently for at least 90 days. You're going to need patience to build momentum, an email list, a simple offer that grows with you. It's not for founders who need money right now or who struggle to stay consistent. And here's the quick test. Can you publish 4 pieces of content in the next month and get 100 people to subscribe? If yes, you're already building leverage. For your first moves, pick one audience, find one problem to solve, and create one simple piece of content around it. Offer a free download or a resource, collect emails, and later evolve it to a small paid offer. That's how content becomes business and how attention turns into equity. Entrepreneurship isn't one game, it's 5 different ones. Each model has its own pace, pressure, and payoff. Venture-backed startups promise scale, but demand control. Bootstrap businesses trade speed for ownership. Service models buy you proof and cash flow. E-commerce builds leverage through systems, and content turns ideas into assets that compound over time. There's no single right path, only the one that fits you, your skills, your cash position, and your risk tolerance. Pick the model that matches where you are now, because when your model aligns with your reality, the whole game changes. So tell me in the comments which model you're running this year and which ones you're planning to try next. And if you want to keep exploring new ways to grow smarter, faster, and more sustainably, watch my next video. This is the 7 best side hustles to start in 2025. It's not too late to start. I'm going to see you over there.